Well, we've had heavy falls in US markets today, with the Nasdaq leading the charge, down more than 3% in the final hour of trading. Now we're joined by Mark Newton. Mark, many traders are seeing this as a very significant move downward, especially for tech stocks. Does it mean that we could have further to fall from this point?
I think that's right. I think the structure continues to get worse and worse and worse, and the price action is finally starting to confirm what a lot of the momentum indicators have been suggesting was possible really over the last 10 to 12 months. We saw momentum start to peak out last spring and summer, fewer stocks hitting new highs. You saw signs of the intermarket divergence, meaning that fewer and fewer indices are hitting new high territory, not only here in the States, but also looking at Europe and Asia. And now recently, post-Fed, we had a little bit of a bounce, and it appeared to some extent like short covering, and that's all been recaptured now to the downside. We've just taken out Monday's lows in the S&P, or the late March lows, right near 1831 in the futures, right near 1834 in the cash. So it is significant. Volume is increasing. Breadth continues to get worse and worse on this move. For the first time in over 2 months, we have about 90% of the volume now going into declining versus advancing issues. So in the short run, oftentimes that can signal capitulation, but from a pure price structure standpoint, the move is certainly not positive technically and really needs to be recaptured sooner than later to think that the market can stabilize. But for now, we're continuing to see pressure and the high momentum names to the downside, the biotech names that have been weak all along, and they'd attempted to stabilize and bounce, and that really has failed. I tend to like healthcare. I think that we're getting close to an area of support in a lot of these healthcare names, but from some of my work, a lot of the cycles that I look at suggests that we should see a pretty significant turn towards the end of next week to early the following. So the fact that we're starting now down and accelerating, my thinking is this has a potential to last at least 3 to 5 days more and could accelerate. My thinking is the S&P gets down to right near 1790 to 1800. We'd likely see more signs of fear at that level, which is not too far away anymore based on what we've done. But
would that mean a correction, a technical correction for the market at those levels?
I think you can argue a lot of stocks have already started to go through corrections at this point. You've seen it already in some of the tech stocks. You haven't really seen meaningful trends being broken on any of the indices up until now. You're starting to see the Russell get very, very close to an area right near 1130. It's important for the RTY. The Nasdaq and the Dow and the S&P, it continues to be more short-term in nature. The volume really hasn't picked up that much, but the breadth continues to get worse, and so you're definitely starting to accelerate a bit until you see signs of otherwise. What's interesting to me is that you're seeing correlation with everything that peaked with equities back in late December, that meaning treasury yields, dollar yen, all those things are falling and have the potential to break support as of today. So the 10-year yield has what's called a death cross. A 50 moving average is crossing the 200-day. Historically, that's been bearish. My thinking is below 260 in the 10-year means we go to 245, and in dollar yen, you see a flight to quality and movement into the yen. Ramped up political rhetoric overseas now with Russia and the Ukraine, which doesn't seem to be, softening anytime soon. So definitely a potential of more volatility, at least in the short run.
Okay, thank you, Mark. Well, that's basically all bad news for the market. That was Mark Newton of Grey Wolf Execution, and I'm Jane Searle for The Street.